Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday as we saw a big move up, a big move down, and now we're rallying up in the overnight sessions. We're up 5% in the overnight sessions as we've hit ourselves on a limit up scenario. So the markets have limited up in the S&P. And so what does that mean for you and your trades as we identify opportunities? If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you're watching on the Chuck Fulkerson YouTube page, do me a favor, head on over to Traders Army YouTube page, which is youtube.com/Traders Army. I want to make sure that everybody is aware that we are moving the daily market commentary off of my personal YouTube page and only to the DMC on the Traders Army page as of April the 1st. So please make sure that you subscribe to our YouTube page at Traders Army. All right, let's go ahead and dive in. So we're up 5% this morning in the S&P. Looking at yesterday, give me a comment below. Let me know if you were able to catch this move. Markets rallied right into our supply zone. This was the supply zone that we identified in pretty much all of our markets. The ES had that level. The Russell 2000 had that level. The YM also had that level. All markets had this level, and the NQ. They all had that same level that we rallied into yesterday and got a really nice move away. So hopefully you're able to catch that little move away that we caught in the S&P, and it came right back to the origin of the move. Right, this is a speed candle, and we anticipate that most speed candles will get retraced. Now we're heading back up into this region. So what I need to do now is remove this level. This level is no longer going to be a supply level for me, and I have to take this supply level away because we penetrated by more than 50% of the way into this zone. When I'm looking at these zones, if we just do a touch and go on a level, then I can use it a second time. But if we trade more than 50% into a level, I want to remove that level completely because I feel like it's probably eaten through a lot of the order flow that exists in there. So now we're bouncing up off of our monthly area of demand. That's where we're getting our little bit of a bounce from. On the 4-hour time period, we can see that we've not put in a new swing high. We've not put in a new swing low. It's really just a retracement. And I'd have to get above here before I put in a new swing high, right? That's really where I'm going to need to be. And so until I can get above that pivot, I'm going to remain at I'm going to remain in a downtrend. I need a higher high as well as a higher low in order to change my trend direction. And so I'm still looking for shorts overall. Now, does that mean I can't take a long? No, I can certainly take longs when the market gives them to me, but I would want to see the market give it to me in the form of a breakout. So here's just something to consider today. If we get some basing at this level, then you could possibly have an opportunity for a little bit of a long. If we get basing at this 2388, right around that 2400 level, then you could have a bit of basing for a long. If not, then I'm gonna not be as interested in the long. I have to have the basing. Now on a 15-minute chart, we're gonna see that there are a couple of demand areas in here where we could see a reversal back to. I'm not willing to take a reversal on a demand zone. I think that the better opportunity is to take the levels on confirmation entries if you want to take the reversal, or just take breakout. So the thing I'm looking for now is where do we get those breakout opportunities, and right now they're just not there. All right, next, NQ, very similar, and here's part of the reason why in the S&P we've eliminated that level. You notice that in the NQ we've traded through it as the NQ is a bit stronger. So if we see some bullishness, the NQ is going to react stronger than the other markets, and that's kind of what it's doing. So if you want to try a breakout in the NQ, I don't have that same setup. So the next thing I would need to do is look for a reversal opportunity in the Nasdaq, and we're also at a limit up in the Nasdaq. So both of these are in a limit up situation. which, we don't just have limit downs during the Globex session. We also do have limit ups. I will say that from a long perspective, you've got a couple of different areas in here that might be worth considering, but we also could just consider when we open back up using this area in here as a long. If we gap up and we open up a bit higher, keep an eye on just utilizing this area here for a potential long on a retracement. So once again, any reversal trades I'm going to be a little bit more skeptical of, because my big picture trend is still to the downside. So any reversals, I'm going to be a little bit slower to get back into, more of a confirmation style. Looking at crude oil, so here in the CL, we see that CL came into our wick over wick level. We did get a little bit of a move away from there. It's a 15-minute zone. We got a bit of a move away, and as it started to move away, then we saw that it came back up and really did a whole lot of nothing. So this is where our 6 candle rule kicks in, right? So you may have gotten out at break even. Maybe you took a small profit on this position, but the 6 candle rule definitely kicks in on something like this. And we're now setting up for a breakout to the upside on this one as well. Now, we do have a little bit of supply up here to be cautious of, and a really nice supply up in this area here. So if you do take a breakout above where we are, then look up here for your first profit target, and keep your stops tight enough that you're not going to get hurt too bad if it does come back against you. This is crude oil. Now, looking at the 4-hour. All right, looking at our 4-hour position, crude oil is giving us a little bit of that double bottom look, but we'd have to get up above this 28.48 before any double bottom would be really truly considered. I mean, this was our breakdown trade earlier last week, and now we could have an opportunity for a breakout to the upside just to get us a little bit of a short-term day trade. Looking at gold, gold yesterday completely changed trend direction on us, and it rallied up hard. We saw gold go straight up yesterday as the gold flight to safety play really just got highlighted. And so now when I go back to my hourly position, looking at this, obviously our 15-minute level blew right through, so that was a small stop out for anybody that jumped in on that one. And once we did that, then we switched trend direction. And once you switch that trend direction, then this has to be a confirmation entry. So that confirmation entry doesn't get you in. So both of those should not have gotten you any sort of a stop out. Now we're looking at where can we get a decent little reversal as the next move happens. Well, I'm going to look to this little wick over wick area right here as our next opportunity, if indeed we get a bit of a pullback. You have another one down in here. I think those are both viable. This is a little bit of a wick over wick followed by this pivot. So if you're a little bit more conservative, you can pull just to this area right in here. Sliding over next to bonds and currency markets, if we take a look at some of the areas that we had identified yesterday inside of our bonds and currency markets, yesterday we were looking at a lot of breakout potentials, and some of those breakouts happened with limited movement, and some of them didn't happen at all. So yesterday was a little bit of a dud in that department. So if you took the breakout in the ZN, you got 6 candled out right through here. Could have gotten wicked out on this area here, but we didn't get the basing before this breakout. So if you took it the second time around, then you got a little bit of that stop out kind of position. Now, we are definitely starting to chop sideways here. Even on the 4-hour, we're seeing this kind of sideways chop. So with that being said, that 4-hour kind of sideways chop, I think we would need a slightly deeper pullback for me to really be excited about this move. And so if I just take a fib retracement of this latest move, I'm going to want to look to see where's my 38.2 and 50% and 61.8 retracements. Now, notice right here at my 38.2 retracement of the 4-hour move up is our demand zone. So I don't live by Fibonacci numbers by any stretch of the imagination. So please don't think that that's the case. However, there are a lot of traders that do. There's millions and millions of traders all over the world that only trade using fib, and there are a ton of algorithms that use fib. And so I want to, when I see a quality area of demand, which is what we have here on our hourly chart, with this being, a nice strong move up, we have an hourly level of demand that has confluence with a 38.2 fib retracement. Now, it's possible this one could get stopped out and we could go a bit lower and kind of hit down here, which is actually a zone that's at a better time of day. And I'm okay with that. I'll take a small loss waiting for price to reverse and get me an opportunity. But that would be the level that I would look at for today based upon those numbers. Our big picture trend on here, we're not overly in a super strong uptrend, simply because we don't have higher swing highs and higher swing lows. We actually had a lower swing low on our 4 hour here, and then not a new swing high, because I didn't get a new swing. So these are just really wide swings in what is more of a sideways market. So just keep that in mind as well when you position size. In the Aussie, we were looking at a potential breakdown. We did not get the breakdown yesterday as it popped up and rallied from that zone. We could see a potential area here if you want to look at this basing right in there. I would need one more touch. We have 2 touches. I need a third in order for me to be willing to take this on a breakout. So that would this little bit of basing here would not quite count yet for the breakout. In the euro, we looked at the breakout area right in here. Yesterday, if we got that potential little bit of a breakout, I did think that our 15-minute level up in here might get us a little bit of a reversal, and we did get a touch and go for kind of a 1-to-1 move out of that zone, but we didn't get a strong enough move to make that really kind of stick through. So unfortunately, that one did not hold up. Now, as we kind of come up, we had spoken about the fact that we're kind of in a little bit of a V pattern here. I would look to this supply area up above us and say that we might want to close this and take this only as a confirmation entry if you really want to take it. I think we're probably going to be better off removing that level and looking a bit lower for our next area of opportunity. And so when I look at this area, this is a really nice, strong move down, followed by a pretty nice move up. You've got this whole long region right in here as a potential area of demand. I actually like this one down here a bit better. This is a cleaner pivot. Time of day is not as good. This is a slightly better time of day, but it's a little bit wider and a little bit more, I guess the word I'd say would be messy. And by messy, I mean all those wicks give me a little bit of room to pause. So I'm going to wrap my lines around this area here. I think this one's probably okay to look at for today if we get a bit of a pullback into that region. All right. Next, moving over to the Canadian dollar. In the Canadian dollar, we did get a breakdown in the Canadian dollar, but we didn't get the basing we need in front of the level, right? Price rallied up, and then we broke right through it. So if you took the breakdown 1, 2, 3, 4, 5, 6 candles later, you should have moved your stop to break even anyway. So even if you did take the breakdown, there's no reason for you to have any loss on that position. It should still be in a decent area. And so now we're gaining a little bit of momentum to the upside as this kind of follows oil, right? As oil has given us a little bit of that as well. We can see that we have some upper wicks here that were indicative of selling pressure that we're coming close to. And so even if you take a breakout from here, you've got those upper wicks that could serve as areas of supply. So I'm not going to trade anything here in this Canadian dollar. I believe the discretion is the better part of valor, and right now we're kind of in between some major swings. So I'm going to hold off on this one for just a bit. Great British Pound and Japanese Yen. So in our pound level yesterday, now we did get a nice little reversal off of the pound level that we talked about. This was a good touch and go for a 3-to-1 reward to risk. We didn't get the basing needed for the breakdown. And so there was really no entry on this move because of the lack of basing. Now, we did get more basing the second time around. I thought we may be able to get an entry, but we rallied up from there pretty hard. And the second time into this level, obviously it went right through. No surprise that it went through on the second time into the zone. So now that short worked out pretty well. The next area we would look at for supply is this one way up in here. And if you wanted to take a little bit of a demand trade, I think you've got an area right here on a pullback. So moving over next to the Japanese yen. So in our Japanese yen position, we talked a little bit yesterday about this region here. Let's say if we break down from this area, we broke down, got a bit of basing, and then it's kind of come back up. So not a whole lot to look for inside of the yen at the moment. That one's probably a break even, either at a break even or very close to a break even position. In that one, I think the better chances that this is going to continue to break down. We're basing and consolidating in here, but I think our better chances to continue to break down. We had slowing momentum to the downside, but we've been unable to really show anything with that. So with that being said, I think that I've got to remove both of those levels there, and let's look for reversals when we get into one of those zones. All right, so overall, there's a lot of opportunity in the markets today as we're seeing some bullish sentiment, but I'm not being lulled to sleep. Until proven otherwise, every bullish move is an opportunity to get back in on the next impulsive move down, and that's the way I'm treating every bullish move. And so, yes, we're rallying up off of monthly demand, and there will be at some point some sort of a V bottom, and I'm going to tell you now that I'd rather miss the very bottom of the V than try to keep hurting myself jumping in. And that's one of the things that I've professed and I will continue to profess. I think looking at the monthly chart, there's a chance we get a 25% rally off of here. And that's still that's still just a corrective move. Meaning if we get a 25% rally, that puts us up to supply. Right, which would be about a 50% retracement of the drop we've had so far. So even if the markets go up 25% off of a stimulus package, I'm not going to be lulled into thinking that the trend has changed direction. Now, there's certainly going to be trades to be had on the way up, but then there's going to be a lot more to be had on the way down. And I think that ultimately there's a chance we could very easily see the next leg down somewhere into this region here. I mean, I'm just being realistic in that assumption because that's our next clean area of demand, which is an area that's not yet been touched or retested. This area here has already been touched and retested, and so this is my clean area, which is at about a 50% drop. And historically, a 50% retracement based on 2000 and 2008 would not be surprising. Right, this move from here down to here is we're looking at about 50.6% on this little line off from the high. So, just wanted to illustrate that. I think that's something for people to keep note of. I'm going to continue to talk about it and preach on it, and I think that's the level that I would be continually looking for. So, all right, everybody, I know we went a little bit long today, but I hope that you enjoyed it and appreciated it. If there's anything I can do for you, please let me know, and share this video with others. We really want to grow the channel a little bit, so share this video with others. I would really, really mean a lot. Thanks so much, everybody. Have a great day. See ya.